Good afternoon. Good afternoon, everybody. Hopefully you are doing fantastic. Today is obviously Monday, August 26, 2024, foul year of our Lord. This is the crypto market update for today. Hopefully you guys are doing fantastic out there. Not a lot of activity. Obviously, we traded sideways over the weekend. Nothing crazy has happened. This week is kind of up in the air, probably for the birds, honestly. Just speaking, kind of how I feel about how this week's going to go. We have some very important macroeconomic factors coming out next week. So we're going to kind of reference those and talk about those. We've got the ISM coming up. We've got non-farm payrolls coming up. We've got unemployment rate coming up for the United States. So that's very, very important. More and more over the past, I would say, couple of years, but particularly the last year, I've noticed, and I've talked about this several times, but I've noticed Bitcoin obviously shifting its tether, I would say, to not just traditional markets, but to macroeconomic factors. Sometimes, but with divergence, sometimes it reacts as you would expect traditional markets to react to. Sometimes it reacts a different way. And this is notably different compared to, certainly the first, I started trading Bitcoin in 2016, and certainly up into, 2020, honestly, I didn't really notice it until last year, the last couple of years, that more and more Bitcoin was very dependent upon the macroeconomic situation. And maybe it's become much more prevalent over the last year, as, kind of, let's just call it what it is, like the recession or the mini recession that we're currently in America has heated up. And so maybe that's why Bitcoin has become more, and crypto in general, has become more dependent on these macroeconomic factors because, just the average individual who used to, back in 2020, throw 20 bucks into Bitcoin, throw 100 bucks into Bitcoin, throw $1,000 into Bitcoin. Most people don't have the money to do that right now. Now when you go to the grocery store to buy 5 things for one meal and your bill is 60 bucks. You know what I mean? So obviously, everybody's feeling the pain. We can talk and gripe about gas prices and grocery prices all day. But maybe that's why. Maybe it's because we noticed that Bitcoin, that's a good theory, that and maybe for any market, that as the maybe general wealth factor or disposable income of the kind of average pool of individuals goes down, markets become more dependent upon macroeconomic factors, right? So anyways, shout outs. I see R Legato, I see Alex81SG, Chemo Zabi, as always good to see you guys. Thank you. Hopefully you're doing fantastic today. We've got a few things to talk about. We're obviously going to talk about kind of the surge in liquidity. That is a very good thing to hear. We're going to look at ETF inflows. They've been very robust, continue to be very good. So overall, I think we're going to just kind of continue drifting up. We could see a pullback. Again, I'm not really expecting this week to be very decisive. I am hopefully expecting, as are all the analysts, that next week's reports will be positive. And if they are, they're probably going to set the tone for Bitcoin and crypto in general for, I don't want to say the rest of the year, not when we have such a massive catalyst coming up as the United States elections, for president, even though those aren't not as important as people think they are, but I rest my case. But they are still important to the markets, and the markets will respond powerfully to them. So, yeah. So I think we're not going to get too much activity or excitement this week, which is fine. It'll be also fine if we just continue to pump. But it's all good. Let's get to the charts and kind of see how everything looks. All right, here we go. Okay, so here we have Bitcoin. We're also going to talk about the Ethereum trading challenge that my community, our private Kajabi community did last week. So I'll give you guys some updates on that. Really fun, honestly. It was really fun just to trade. Very simple strategy, and it was actually profitable. So it was pretty fun. Anyways, so here we have Bitcoin. Bitcoin, obviously, we broke above the Gann swing high-low baseline on Friday when, honestly, as soon as Powell came out quite dovish, speaking from Jackson Hole in the morning, he's like, yeah, I think we're ready to cut interest rates. And the markets just, started popping. All right. So, of course, Bitcoin just surged. Bitcoin surged, had a beautiful Friday, Saturday and Sunday, as we can see. Not a whole lot of action happened. We can even go down to the 1-hour chart and we can just see, Bitcoin literally just traded sideways. No real decisive movements, no profitable trades to be made. Maybe here on the long you could have caught. All right. And then obviously going into Monday morning, we did break down and we've just been kind of drifting down. Now, I will say that discretionarily, this type of price action doesn't look super positive. I do look at my momentum oscillator on the bottom and I see, for example, that we do have a little bit of regular bullish divergence, for example, but it's not very strong because there's not very wild swings. So, say that as you will. We are, of course, above the daily baseline. So if you are going to be looking for short-term shorts to kind of hedge your bets, which there's probably nothing wrong with that. There's probably nothing wrong with leaving, for example, if you are in daily long swings like I am in daily swing longs. you know, looking to pick up a little bit of hedge protection here, that's absolutely fine. And then of course, if we do pump here and like break above the resistance that we seem to have formed, you know, around 65,000, you can close your hedges and just kind of lean more into your long. You know, a little bit more hands-on way of trading that I don't really like. You know, I really like set it and forget it type trades. That's why I just trade with a strategy. But, you know, just, you know, off the cuff, that's totally fine. Because if we go back to the daily, you know, we've got a wide range. All right, let's just think about this. We put in a very significant low, obviously, time transformation, bottom feeder minks, they all caught that low. You know, this reversal, not bullish engulfing candle, but inside bar that we had on Tuesday, August 6th, right after this huge dump below 50,000 that wiped out almost all the liquidity, like wiped out all the leverage, restructured the futures markets. But we are starting to see some more positive things. This is what I was talking about with liquidity, as in the title of this video, liquidity reaching a new record high. Leverage on perpetual futures exchanges has increased. Inflows have increased, and most importantly, the most important metric, and most people don't look at this, is stable coin minting. All right, stable coin minting is a very important metric. There's several different places you go to look at this, but stable coin minting is so important because it really shows you for stable coins to be being mint by Tether, for example, then that involves fiat to crypto conversion, which means that people are actually taking, you know, I hate to say real money as a crypto person, but, you know, cash, fiat, and they are converting it into cryptocurrency, signaling that they are intending or they're interested in having their excess capital or primary capital sit in the cryptocurrency asset class. And people don't do that. You know, only wealthy people mint stablecoins, by the way. People don't do that if they don't think that that asset class is going to perform positively within their time horizon. All right. And usually their time horizon isn't like a day. If you're minting stablecoins, you're not like doing a quick flip. You know what I'm saying? Like, so, you know, several months, several weeks, certainly at the very least. But again, stablecoin minting has been quite robust lately, which is nice. I do want to look at, we can look at a couple different data points. This is obviously far side investors, but you guys know that I do prefer so value. I am going to hide myself here just temporarily so we can actually see here what we've got going on. And we can take a look here at our ETF inflows. Okay, ETF inflows so far. All right, obviously we've not reached the kind of, you know, euphoric peaks that we had. I mean, and this isn't even euphoric if we go back, you know, earlier to 2023. But we are, you know, things are robust. Things are picking up. Things are quite nice. It's not the kind of absolute nothing doldrums that we were experiencing there for a while. So ETF inflows have been quite good. We can see that headline here, ETF news, Bitcoin ETF flows, inflows surge following Powell's dovish comments on interest rates. We had, as of, let's see here, 8/23. Let's see here. Oh, here we go. As of August 23rd, we haven't updated as of this week, but as of last week, we had, or excuse me, as of Friday, we had 252 daily total net inflows, quite good. Over almost $18 billion in total inflows cumulative. So quite nice for the Bitcoin ETFs. And obviously the Bitcoin ETFs is another key factor that we can look at to see that fiat to crypto conversion. All right. So important, not just, it's one thing to look at like leverage, you know, it's, as I said, you know, Bitcoin is just kind of widened out as an asset class, and it's not really the average people that are just piling into, you know, YOLO coins now. Things are a little bit more broad, a little bit more robust. So when I look for, okay, is number going to go up? You got to look at the macro, right? You got to look at, in general, okay, are there inflows? Is there stable coin minting? If those things are happening, then that is a signal that the wealthy investors, that the smarter investors think that the asset class is going to continue to rise. All right, so generally good, okay? So pretty simple. All right, so looking at the technicals here, obviously, yes, we did break above the Gann swing high-low baseline. As we can see here from time transformation, we are a little close. We were actually just a little bit ago in overbought territory. Now that prices moved down just a tiny little bit, we've actually moved out of there. That's not why we're not getting the purple dot of death anymore. It was on the chart just a few minutes ago, right before I started the stream. We could, of course, experience a little bit of a pullback because I don't think we're really in that euphoric state of the market. We're not in a strong directional trend, for example, as we can see over here. Or as we can see over here. In those situations, when we get oversold, or excuse me, overbought, I usually like to step on the gas instead of considering that, oh, we're overbought, it's time to sell. No, if something's in a very strong trend and it goes overbought, usually that is the sign that we're going to continue staying overbought for quite a while. RSI kind of works the same, but I do like, of course, my own indicators because they're a little bit more responsive, and I've just been using them for so long that I know how they work. Let's see here. Kimozabi has a comment here. ETF inflows seem to have a delayed effect. I've heard that they have up to 55 days to acquire the BTC from the ETF inflow. I'm not 100% sure about the 55 days. I'm not saying that you're wrong. I'm not quite sure. I would agree with you. I would agree that there is a bit of a delayed effect, right? So it's not as if we see, well, I mean, you can have an immediate effect insofar as perpetual markets for speculators in situations where leverage is quite high. When leverage is quite high, then that means that speculation or how traders feel about something like news, for example, can move price wildly because there's so much leverage in the system. And when there's a lot of leverage in the system, people are very sensitive to price swings. So when there's a lot of money sloshing around in the system, when leverage is high, first off, when leverage is high, it indicates that there's a lot of speculative money in the system in the futures market. All right. So that's fine. When you're in that state, okay, news, panic events, situations, their swings become exacerbated because you have so many individuals that are tightly levered. And so they're very sensitive to price swings. So for example, if a rumor starts floating around or a news story breaks that it seems to be quite bullish and price starts climbing because everybody is jacking up leverage and going long, the people who are highly leveraged short are very sensitive to that movement. And so they have to start closing out positions or opening up more positions. But either way, that exacerbates these spikes up. Same for swings to the downside. So yeah, I would say delayed effect, probably a good thing too, because as I said, going back to kind of the bigger picture here, what this is telling us, what the picture this is painting is that more sophisticated investors, smarter investors, those with money, right? They're putting money into the asset class, and they wouldn't be doing that if they didn't think that the asset is going to go up. Doesn't mean that they're necessarily right, but it's kind of all, we only have the data points we can go on, right? Nobody has a crystal ball. So let's see here. So we do have, again, a DPMO is confirming the long. Time transformation is obviously confirming the long. We do, of course, have our new kind of area of support now at 59,000. All right. So again, if you're worried about price coming down to 59,000 or kind of coming back to even coming back to retest the top of this range or fill this gap, whatever kind of metaphor you like to use or way you like to think about how the market works, it's undeniable that the price does like to come back and fill gaps. It's undeniable that price does like to come back and retest previous resistance as support once it successfully breaks out. So if that were to happen, we could see price pulling back to 61,000. Okay. And if price pulls back to 61,000 on a closing basis, we could certainly wick down to 58,000 or 59,000. Not 58, probably not 58,000, but 59,000 certainly. So if you're worried about that, you could pick up short-term protection. Probably not options, just futures is the best way to do it. But overall, as of right now, I feel pretty comfortable with my long swings. There's really nothing to do. As I've learned from trading that, it doesn't really matter how I feel about a trade. As long as my system gives me a signal, 70% of the time I'm going to win the trade. And so I should just probably not try to think about it so much. And that's typically how I approach things. Okay. I do want to talk about the Ethereum challenge. All right. So I want to introduce you guys to a couple of different concepts here. So obviously, first off, the first thing, if you guys weren't aware, I do run a private community where I share my trades, I share all my courses, all my indicators, everything that I've created, link in the description. And one thing that I like to do is what we've been doing lately is these trading challenges. All right. Where I will introduce a concept or a trading style or a trading strategy or particular combination of indicators. And I will challenge people to just trade these with a certain risk to reward ratio, with a certain stop and target system on different time frames. And what we've been doing the last 2 weeks is Ethereum. Okay. So we basically did the same challenge for 2 weeks. All right. But this was just simply using two of our indicators, all right, that everybody gets with their subscription. Two of our indicators, Minx, which is our most popular indicator of all time. I don't know, bottom feeder might have it beat out, honestly, but they're very different, right? Bottom feeder literally snags bottoms. This is an all-in-one trading strategy. Minx is, also an all-in-one trading strategy, but it's just a two indicators trading strategy, really. But anyways, we have our baseline indicator on the chart, all right? And it is currently set, I'm going to show you guys, it's just currently set to be a Hall moving average with a length of 60, All right. Everything else is default, which I think this is actually the default of the indicator on TradingView. In Minx, all right, we have a lot of different settings, but don't worry about it. These are all the default settings for Minx, okay? With the exception of you can see here that there are settings in here for the baseline length, baseline type, baseline source, baseline options, and if you're using a custom time frame for your baseline, a custom time frame option here. For this challenge, we're of course trading on the 1 hour time frame because I wanted people to get in the habit of just trading with a strategy. All right, like we are only going to trade when this system gives us a signal, and I chose the 1 hour time frame because I wanted people to get a sufficient amount of signals that they could really, get 10 trades in a week, so they could really see the viability or effectiveness of the strategy. So what I had people do for both of these challenges is, as I said, it was really the same challenge for 2 weeks. Use the 60 period Hall moving average as the baseline. Use the default settings for Minx, but configure Minx to the 60 period Hall moving average baseline, and make sure that it's set to the current time frame if you're on the 1 hour chart, or you can even go to custom time frame and set this to 60, for example. Either way would work, but for this, we're just going to set current time frame. So what this means is current time frame baseline filter of signals. That's a lot of words, but it's just saying, hey, the Minx gives trading signals, and the baseline is there to act as a confirmer, but it's a baseline confirmer on those signals. And so if you configure your Minx with your baseline, that will filter out certain signals, and it will only give you a signal, for example, when price is A above the baseline, and then Minx gives the long signal. All right, so both of those things have to be true. You could obviously disable all this by saying no baseline influence on signals, and if I choose that, for example, you're going to see a lot more signals pop up. But we're just going to select current baseline, and you can see a lot of signals go away because now those signals are no longer jiving with Minx, with the baseline, excuse me. So let's break this down. Pretty simple. I recommended, anybody can measure out their take profit and stop loss however they want. But for this challenge, I wanted to keep it very, very simple. No multiple take profits, no 1, 2, 3, nothing like that. I just said, hey, no 50-50, which is usually the way that I trade with my daily strategy. But for this strategy, I just said, hey, I want you guys to trade on the 1 hour. I want you to trade Ethereum because it's a little bit more volatile than Bitcoin most of the time. And I just want you to trade Minx long signals, or with the only exception that if Minx gives a signal, price has 3 bars to close above the baseline. Okay. So you can obviously see in this particular example, Minx gives the long signal right here, and we do close underneath the baseline. But 1, 2, 3 bars later, we do close above the baseline. That's a valid trade. That's totally fine. And Minx isn't going to give that signal on the indicator because I haven't programmed it to do so. Or actually, no. We do have the Wada Atar Explosion Strategy Tester, which is also quite popular of ours. That one will do. We call it the N bar rule. And I got to give a big shout out to Mr. Furry Boffin, who gave us the code for that. But we don't have that one for Minx yet. So yeah, so that's why this is a long signal. So obviously, we're just using a 1-to-1 risk to reward ratio. I recommended that people use Quadriga to measure out their take profits, and just to use 1.5x multiples of the average true range at the time of the trade for their take profit and stop loss. So your take profit and your stop loss are going to be equal distance, and I recommended people use 2% risk in a small capital account. So let's look at the results. Obviously, we start off pretty strong. This vertical line indicates midnight between Sunday and Monday. So Monday was the start of the challenge. We have our first signal here at a closing price of $2,614.20. Our stop loss and take profit is each 1.38%. And as you can see, this one's pretty simple. We do just continue to move up, and we hit our take profit within 4 hours. So pretty simple on that one. That one's nice and easy. We will move over here and look at this particular signal right here. You can see this is a little bit interesting because normally, the way I normally teach, when we get a signal like this, all right, you can see, for example, that we get the short signal here, 1, 2, 3 bars. We do close below the baseline. And so technically you could have entered here. All right. But I decided to be fair. All right. With this one, or maybe fair, whatever. But I was like, okay, most people are not going to take the trade here. Most people would wait to take the trade down here. All right. So when I took this trade, by the way, I took all of these trades. When I took this trade, I didn't think that it was going to win. Okay, I just have a lot of experience with this type of system, and my rule, I usually don't take trades like this. When price has moved a long way away from the baseline, price has a there's this phenomena of price called reflexivity, which means that and this is what all reversion to mean strategies is built around. When price has found a fair range that it's trading in and it moves quickly away from that, there's a lot of incentive and dynamic to move price back towards that range again, right? Traders felt very comfortable there, and they're very uncomfortable when it moves far away. So for whatever reason, obviously people, buying what they think is a deal and pushing price back up. So when I took this trade, I fully expected it to fail, but it didn't. As you can see, it took a while. All right, it took a while. There was actually a bad signal in between there. So we're in the short, and then we get a long signal. We keep the short open. We take the long. The long fails, but the short actually hits the take profit target over here on this wick. So that was quite nice. So we have 2 winning trades to start off. In between here, we do have a losing trade because, as you can see, we now have our first printed signal. All right, long signal right here. It wasn't very long. Price did not really go up at all after that, right? We just got wicked out right here. Now, stop loss timeout of 5 minutes maybe could have saved that trade because, you can see that the signal was right overall. Okay, but I digress. Long signal, and then 3 bars afterwards, we get a contrary short signal. So obviously we take that trade. That's this setup that I have right here. And very, very quickly we get rewarded. We get to take profit on that. As you can see here, obviously with any kind of trend following strategy, in situations like this where price is just kind of consolidating, you're going to get some false signals. But if you have a moderate enough take profit target and a wide enough stop loss, you can turn a big majority of these, what most people would consider to be losing trades. What's up, Profit Bear, by the way? I see you there, man. You could turn a lot of these potentially losing trades for most strategies into winners on asset classes like cryptocurrency because of the volatility of the wicks. All right. So for example, it was just this one candle that gave us 2 winning trades and 1 losing trade. So important. Whereas most trend following strategies just get completely chopped up because trend following strategies tend to have very wide take profit targets. All right. And that's kind of the opposite of what we're doing here. We're using trend following strategies, but we're taking short profits because it doesn't matter. It doesn't matter whether your take profit target is 5% away or 0.5% away. It doesn't matter. If your position size is consistent and your hit rate is consistent, then you're going to make the same amount of money, literally. All right. 2% risk per trade. It doesn't matter if your take profit is 0.5% away. That just means that if your obviously stop loss is 0.5% away, your position size is going to be much larger, but you're going to lose the same amount of money and make the same amount of money when your take profit target gets hit. You're going to make the same amount of money as if your take profit target is 5% away and your stop loss is 5% away. You're going to use a smaller position size, significantly smaller position size than the 0.5% setup. But you're going to make the same amount of money. It doesn't matter, right? Like, it doesn't matter. So it doesn't really matter what style of trading that you want to trade or what strategy that you want to use at the end of the day, as long as you can optimize a strategy to have a 65 to 70% hit rate and you're consistently trading it and you're consistent about your position sizing, you're going to make money. If you have a 70% hit rate and you're consistent about your position sizing, you cannot not make money, right? Those words are going to come back to bite me because inevitably there's always people who do, but you get my point, right? Okay, obviously long trade. So long, short, long. Obviously this one's an easy winner. Price is moving to the upside. We do have a long trade here that unfortunately does not work. Let's see. Where do I actually have this one? Yeah, it's right here. No, that doesn't feel right. Yeah, it's right here. Here's that long setup. This one is a loser. Obviously we get the long signal here. All right. So we would actually enter either on this close or this open. Our take profit target is up here, but unfortunately we just don't make it because price does pull back, basically doesn't make any forward progress, pulls back, hits our stop loss barely. Again, stop loss timeout here. 3 commas feature could have probably turned this into a winning trade. So literally that's 2 trades I see. By the way, spoiler alert, there's 10 total trades, 7 winners, 3 losses. That's 70% hit rate. And 2 of those losers so far that we've looked at probably could have been turned into winners with a stop loss timeout feature. So I'm just throwing that out there. All All right, and then we have the short trade right here, as we can see very quickly. You know, obviously volatility was very low at that point in time, so the ATR was quite low. So you can see the difference in this setup. You can see the closeness of the take profit target. I'm talking about this box right here. You can see the closeness of the take profit target and the stop loss. We hit the take profit on that very, very quickly. And then no signals here. I mean, sadly, we just didn't get any signals, and I didn't actually take these trades. Although had I been because this was Thursday going into Friday, and I was pretty busy those days. But obviously, there's lots of opportunities here because we get the long signal here, and then 1, 2, 3 candles later, we break above the baseline. So you could have gone long here, bam, taking profits. If you're using reversal baseline bounces, which is a strategy that I recommend, you could have re-entered here, bam, a reversal baseline bounce here, bam, probably, you know. So there's potentially 3 more winning trades there that I just happen to miss out on. But no signals, no official signals for Ming, so I don't feel bad about that. All right, so after that kind of long gap of signals from Thursday into Saturday, Saturday kind of starts off with a bang, giving us a short signal right here and immediately punishing us, right? Immediately punishing us. And then we get a short signal right here, all right? I like that often, it just seems like very often we get like entry signals on up candles, which is really nice. But nice signal here, and we very quickly hit the profit target right here. Almost, you can see here, very, you know, got nervous here, but we did not hit our stop loss on this trade. We did hit our take profit here. And then coming back in on Sunday evening, Sunday evening about 6 o'clock, we get another short signal, and obviously that one would have just completed successfully as of now. So many, you know, and here's, so again, total results from this Ethereum trading challenge, 10 total trades, 7 winners, 3 losses. As I said, 2 of those losses, and maybe even this one, probably not this one because price was above there for multiple hours. But these 2 trades, it seems like price was only below the baseline for minutes. So again, a robust stop loss timeout of 5 to 10 minutes probably could have converted those into trades, in which case we'd have a 90% hit rate week. It's totally fine. The week prior to this was very similar, 67% hit rate. And so just to put that into context for you guys, let me pull up my notes here. Just to put that into context for you guys. And again, it's not all about. Let's see here. Where did I post this? It's really weird. Here we go. Sorry. So again, as I said, we were using a 1-to-1 risk to reward ratio and 2% risk per trade. So if you had a $20,000 account, and you did this challenge with us last week, you would have made $1,600. If you had a $50,000 account, you made $4,000. And if you had a $100,000 account, you would have made $8,000. All right. So $1,600 in a week with a $20,000 account is very doable. Unfortunately, I think a lot of crypto traders or people, you know, like if I were to post that on Twitter, which I haven't yet. If I were to post that on Twitter, I just feel like I would get a lot of like, you know, what is this, like returns for ants? But that's not, listen, guys, like there is a big difference between, you know, what a lot of people do in crypto, which is to go all in on a coin and expect that it's going to make them wealthy. You know, everyone tries to do that. And I've met literally thousands of people who have told me all about degenning and going all in and mooncoining and all that stuff, literally. And at the end of the day, I know a literal handful that when it's all said and done, like ended up cashing out with lots of money. It's just not very likely. All right. That type of trading style, that trading mentality, it doesn't teach you anything that you can get lucky. Yes. And you can make a lot of money, but you don't learn any of the lessons along the way to preserve that wealth. And so the same tactics and strategies that will allow you to have huge punctuated wins like that are also the same tactics and strategies that will also make you lose it all just as quickly. So unfortunately, you don't learn any of the emotional discipline, the self-control, the capital management, the risk management. Those are all the real skills that you need to be profitable. Okay. Trading is not hard. Okay. Like I just showed you, it's very simple. You could accomplish the same thing, not as well, and you know, I got to promote my stuff here, but you could accomplish something similar with the RSI and a moving average. All right, those are free. Okay, anybody can save up $20,000. I don't care. I don't want to hear it. Anybody can save $20,000. Save $20,000, and you just trade your strategy. You practice risk management, and you can make decent money on a weekly, monthly basis. Okay. And you will also learn the skills along the way to not go crazy when you have a bad week, when you have a bad month. All right. But you just have to be consistent. It's not sexy. It's not glamorous. It's not YOLO. You're not going to make $50,000 a day. You're not, unless you have a $1 million account, then maybe you can. But you can do this consistently for a couple of years and then have a sizable trading account and then just continue to do that and just trade. This is the lifestyle that I'm trying to teach people to do. This is what I'm selling, guys. All right. It's not anything super fancy, man. John Doe, good to see you, my friend. I'm doing well. I am doing well. Guys, I do got to wrap it up in about 3 minutes, I think. 3 minutes, I think. So overall, we are seeing Ethereum and Bitcoin kind of come down over the last few hours. So it looks like we are going to get a little bit more of a pronounced pullback. We are breaking the 4-hour baseline. So again, 4-hour baseline could be moving us down, as I said, to like 61,000, high 60,000s. That's just a very logical place for the pullback. Come on, I want snake oil. Hey, they got a lot of that on Twitter, man. There's a lot of other crypto YouTube channels that got that, man. Sorry. Like I said, I realized that you weren't looking at the chart, or that you couldn't see the chart. We are breaking the 4-hour baseline right now. Will be confirmed on this close. So again, if we do end up breaking down and losing that 4-hour momentum, again, we're either going to see price kind of rally immediately, but you know, we hit 65K. You know, it's okay to have a pullback. It's okay to have a pullback. Overall, I would expect to see price kind of range this week. I'm not expecting to see a lot of volatility, not with such critical things coming up next week. And I guess I didn't really touch on that. So next week we do have let's look at the Forex Factory calendar. All right. So we do have the ISM manufacturing index that's coming out on, I think it's the 3rd. Yes, this week, none of this stuff's super important for US markets or for crypto. Let's see here more. Here we go. Yeah, so next week on Tuesday, we're going to get CPI, or no, that's the Swiss franc. We get manufacturing PMI. Yeah. ISM manufacturing is really important. I think a lot of people kind of don't think it's really important, but it is. ISM is pretty important. So that's going to come out on Tuesday. I mean, overall, like just the macro is really good for crypto right now. You know, weaker US dollar, lower bond yields, coming into rate cuts. Historically, that's been really good for Bitcoin. And then we got US unemployment rate. That's going to come out on Friday, I believe. Yeah, USD unemployment rate. It's going to be important. And then we also have the following. We get non-farm on the same day, actually, don't we? Yeah, we get non-farm on the same day. So we get non-farm payroll on the same day. So obviously we know how important non-farm payroll was. It's why the market tanked a couple of weeks ago and led to like one of the worst days in the market since 1980. Like Jesus, Black Monday, as they're calling it still. So we know how important non-farm payroll is. And again, for those of us in America who care about this stuff, as I talked about last week, non-farm payroll is also the last economic indicator that we have to look at to really tell us whether we are, of course, you know, obviously we are hurting economically, but it's kind of the last data point we're going to look at to see if we are going into an official recession. And that is literally, it's classified as not many other factors, but all of those factors are true. The only factor that's not true is non-farm payrolls being below 50,000. All right. So basically private job creation in the United States being decimated is the last indication of a recession. Everything else has already happened. Yield curve inversion for 18 to 24 months. Yeah. So anyways, but that's all I got, guys. Thank you so much. Quick episode today, guys. Sorry I was so late, but I did a lot of stuff around the house and I just wanted to come in. Took some trades. I wanted to give you guys an update. I will be back tomorrow. I'm going to be trying to stream every day. So I will see you guys tomorrow. We'll have a little bit more material prepared tomorrow. I'll have some more charts and graphs for us to go over. So tell your family, tell your friends, tell anybody. Just make sure you subscribe, because we're almost at 24,000 subscribers. We're literally like 16 subscribers away. So if you could just get 16 of your friends to come to the channel and hit subscribe, that would be great. All right. Links down in the description for everything you could possibly need in life. Links to join our private community. Links to copy trade me on Jumpex. For any individuals that are out there looking for a KYC and VPN free exchange, I highly recommend Jumpex, my current exchange of choice. I will see you guys tomorrow. Trade safely and do not let the bed bugs bite. I just came up with that on the fly. Let me know if you guys like it. I don't know how I feel about it, but I'll see you tomorrow. Bye.